Hey, Jason here. Tell me, what do you think is a trader's greatest risk? Many people will say it's a market crash. Others believe the danger lies in putting too much money in the wrong stock, or perhaps taking advice from the wrong people. Sure, these all carry risk, possibly extreme risk, but I believe there's something that beats them all. It's been the source of ruin for so many first-time traders, millionaire professionals, and even some of the world's biggest banks. Do you know what I'm referring to? Well, let me tell you, it's leverage. You see, leverage is a swing factor that could make you a fortune or it could wipe you out. Some traders use it with great effect. Leverage lets them take large positions for a relatively small outlay. But for others, it's a complete disaster. Big trading positions quickly turn into big losses. Traders who don't fully grasp the risk could see their capital vanish in no time. I'm going to share a real-life story about someone who took on too much leverage. It's a powerful reminder of why you should always understand the risk that you're taking. Okay, check this out. This is a trade chart for a company called Bradken. I sent a short signal to members of a trading service when the shares were at $3.35. The exit stop was set at $4.92. You see, my strategy is to buy into strength and sell into weakness. As I often say, the odds favour that a trend will continue. Trading with the trend, that's how many of the best traders make money. But no trend comes with a guarantee. Markets can reverse course without warning, and that's exactly what happened with Bradken. The company got a takeover proposal 4 days after the short signal, and this sent the shares soaring to $4.80, just 12 cents from the exit stop. Now, you might think that this was the end for this trade, but it wasn't, not by a long stretch. The bid for Bradken fell over just a few weeks later, and this sent the stock into a tailspin. Have a look at this. Bradken was a standout short trade. The end result was a 77.6% profit. But look at the path the stock took. The share price didn't fall from $3.35 to 75 cents in a straight line. Instead, it went via $4.80. The key to making that profit was being able to hold on. I'm going to show you an excerpt from a message I received at the time. It's from a member of a trading service who placed a leveraged short trade on Bradken. Here's what he says. I was forced to buy back half the Bradken shares due to a margin call at $4.45. The remainder I held on until 2 days before the failure of the bid and cut the rest at $4.14. I didn't want to hold on until the stock hit the stop loss and lose even more money. I know I overreacted with a $4,000 position and it cost me dearly. It was from Julian. Now, I remember reading this email for the first time. I was so disappointed for Julian. He'd emailed me after the initial price surge and I was hoping he'd held on. And this is the danger with leverage. Julian lost his grip on a highly profitable trade. His forced exit took him out at precisely the wrong time. It's possible to make a lot of money with leverage, but it only takes a few mistakes to bring it all undone. Your portfolio, it could take years to recover. Most traders think about the potential for gains, and that's only natural, but fewer give as much thought to the downside. And this often leads to taking too much risk. So sure, use some leverage if it's right for you, but be sure to keep it under control. Don't let too much leverage turn the year's best trade into a disaster. Well, that's all for this week. If you're watching this anywhere other than my website, motiontrader.com.au, then come over and have a look. That's where I have all the free stuff. I think you'll like what you find. And if you like this video, or even if you didn't, scroll down and let me know what you thought. So until next time, I'm Jason McIntosh, and let's find some trends this week.